welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is Market Today, a show where we will help you understand all the trading setup as well as market strategies you need to know about the trading session today. Remember, this is also the session when we will be seeing the Sensex contracts expiry as well. Now, remember, the penultimate session of this week, it will bring you the first of the earning season for quarter two as well, and that's why the market session is extremely important. It will be two companies that will be reporting their earnings from the IT pack, and both from the Tata Group. Tata Consultancy Services and Tata Elxsi will also be reporting their numbers. Along with it, GM Breweries will also be coming out with the first set of numbers today. But let's start off by understanding what is the trading setup like. Now, remember, yesterday we managed to defend about 25,000 odd mark, but if you could see a mirror image of what really happened throughout the course of the trading session yesterday, you could just pick up Tuesday's trading session. The early gains, they were sold into, dips were bought into, and again eventually sold into, and we ended at the low point of the day. And that's exactly what panned out in Tuesday's session as well, and for Wednesday too. Now, what's happened is that towards the end of the session, only the markets have to thank the IT stocks for the gains and for remaining above the 25,000 mark. That's the courtesy IT stocks, the only sectoral gainers that remain by the end of the session. What happened overnight? Well, S&P and Nasdaq reversed the previous day's market action to finish again at record high levels. S&P 500 0.5% higher, Nasdaq up by over 1%. There was a tech stocks rally again. AMD was up 11%, Dell was up 9%, and Nvidia shares were also up by 2% as well. Now, as of today, again, the markets will be focusing on Federal Reserve Chair Jerome Powell's remarks again. There are increasing hopes from the FOMC. There are indications coming in that for the rest of the year, the Federal Reserve should be resorting to some easing as far as the policy is concerned. So that is going to be keeping the sentiments in focus at this point in time. Remember, for Asian markets also, we've seen large part of the Asian markets also higher in trade, and thereby lending some support. So the Nikkei was up by again about 1%. It has been rallying in trade. You can also look at the Shanghai index, that's also up and about, but the Hang Seng is slightly lower in trade. The Gift Nifty is again indicative of a positive start. So let's hope that, that starts on a positive note yet again. But what will be important, as I clearly said, is the IT stocks. And of course, TCS is one stock that we will be starting to watch out for. Experts believe most of the brokerage houses have penciled in a wide range of the bottom line growth, 3.7% to 9.6%, with HDFC Securities hoping for a 3.7% growth. It is the most lower estimate that we have on the profit after tax growth for TCS, but Nuvama has a 9.6% kind of an estimate as well. So anywhere to the range of 12,350 crores to 13,050 crore rupees as well is the kind of profitability that we are given to understand. But remember, this time around, no press conference there. So, we will have to just dive into the fine print to find out what the sentiment is and what the management expects on the outlook, on the client spends, on the restructuring, all of that, and deal wins, etc., will be important to be marked as well. But let's welcome our guest on board. I think we are now joined by Mr. Devin Choksi, MD of DR Choksi FinServe, to help us understand the market mood and what to focus on in the current setup as well. Warm welcome to you. Good morning, Devin sir. Thank you so much for taking the time out. Always a pleasure to have you. Let's start by understanding from you, on the IT pack that I was just marking. Today is the first day of the Q2 earnings. TCS will report its earnings, therefore. And yesterday we did see a lot of pickup. In fact, last few weeks also, IT stocks have remained largely in favor. So there is some optimism. Does it reflect that the worst is already in the price, and from here onwards, one could actually hope for a turnaround or a pick up reversal in the IT stocks? And how would you look at the earnings pan out for this sector, sir?
So, good morning, Sakshi. In my understanding, I think few things will have to be watched out for. While the top line could possibly meet the expectations of analysts, largely because of the fact that those numbers are driven by the contracts with the customers. And that's where probably I think one would remain pretty confident about the executing well, and the customers billing also taking place in this particular period. The challenge that I see, as far as I think the numbers are concerned, is in the area of margins. Every single company possibly is striving hard to maintain the margins as far as I think the books are concerned. On one side, because of the AI related outcomes, The customer is demanding outcome-based solutions as against time and services-related solution, which these particular companies have been providing up till now. So certainly there is going to be a competition on margin front as I see it. On the other side, companies like TCS will have to provide for those 12,000 employees which they are basically trying to upload from their books in next 2 quarters. In my viewpoint, I think that provision will have to have impact onto the working of the company, either fully or partly in this quarter as well as in the next quarter. So given that kind of a situation, I would be a little bit circumspect about the margin as far as the company's margins are concerned, vis-a-vis the top line maintenance of the revenue is concerned. So we'll keenly watch out for this commentary without taking any particular view at this point of time on the stock. In my viewpoint, the downside probably is over in the business condition if I have to look at it. However, I think the clarity on the margin front will have to be provided by the company in respective cases.
Absolutely. So that's the expectation on TCS at this point in time and the IT sector overall. Devin sir, since we're talking about TCS, I wanted to take an overall view on the Tata Group, which has again come back into news flow over the last couple of sessions. And that's largely on India's most trusted conglomerate it is always seen as, and how that is now facing an internal turbulence. We've seen, 2 days back, a 45-minute, meeting take place at Home Minister Amit Shah's residence, along with Finance Minister also attending that as well. There are reports that the center has urged the leaders to restore stability at the Tata Group as well. Remember, we are at a year of Ratan Tata's death anniversary that we are at this point in time as well. And there are some issues that have come to for, probably the governance disputes, control over the board of appointments of disputes, debate over public listing of Tata Sons as well. So there are lots of issues that are already being talked about, or the buzz is there already. How are you looking at when India's largest, perhaps, and the most trusted conglomerate goes through such internal rift? What does it mean for the shareholders at large? We have upwards of 20 companies that are listed. One has the allotment of our Tata Capital will happen today. So there are more and more companies that are getting listed. How should investors be really looking at this point, sir?
So for investors at this point of time, the fundamentals of businesses of the company, they are not impacted. So let us put that one line clear across to all investors that I think nothing is happening on the fundamental side of the businesses. They remain pretty strong and clear. Now, what exactly is going to be the situation at the board level, I think is something which you need to go into detail. In my viewpoint, I think currently the environment is slightly tough to analyze, largely because of the fact that not enough amount of information is available on that front as to where exactly in the boardroom the conflicts have arisen. In my viewpoint, I think if the conflict is aroused largely in the area of control, etc., then they should be seriously looked at. But if the conflict is raised at around that the growth part of the businesses, then probably I think that information needs to be analyzed really more systematically. At this point of time, anything other than this, I think, can be or will be a speculation if at all I have to put it across. So I would rather say to investors that fundamentals of the business should be looked at. They are not getting affected. Maybe some boardroom level matters. I think as and when we get little more information about it, we should be interpreting it, but not to get nervous on any other aspect at this point of time.
Okay, got that. Well, we already have the pre-opened rate viewers on the Nifty. We are looking to understand that the markets could be again starting with a positive bias at 25,082. Let's see how that one pans out. Let's actually pull up the Nifty IT index. Yesterday, that was the lone gainer in trade right ahead of the earnings. Let's pull up that one to see how that's panning out, and some of the stocks there as well, like TCS, for instance, 0.4% higher right ahead of earnings, as this will be the key focus area for our session today. We'll definitely keep coming back to it. Infosys, by the way, will also be in focus, at this point in time, right ahead of earnings as well. Coming back to some of the other aspects, we talked about Tata Capital, Devin sir. So the primary market action is only moved up in the entire month of September. October continues as well. We have two large IPOs simultaneously opened, Tata Capital as well as LG. There were a lot of investors confused about which one to really go for at this point in time. Simultaneously, we are given to understand that out of the 20 listings, at least a third of the listings have actually slipped below the issue price, and some have also crashed about 30, 35%, 40% as well. So, how are you looking and analyzing at this IPO space for investors when there is such a big IPO rush? Every day you see two to three names coming in, getting listed as well. How are you, advising clients at this point?
Well, I think that's a little bit of a concern as far as the IPO market is concerned, because I think the slurry of IPOs which are coming into the markets, definitely they create a lot of pressure in the overall environment. Let's put one across, I think, as far as I think the pricing pressure is concerned. Most of the companies who are basically wanting to take the valuation while offering the shares, the institution investors are the ones who are sitting in the closed door and deciding the pricing for those particular companies. And frankly, I think they are sleepers. That's the unfortunate part of it. That most of the institution investors have now found IPOs as a flipping machine to generate additional amount of alpha or the portfolio returns. Little sad that I think they are misusing the control that they are getting into the system. Maybe in my viewpoint, I think there's a serious need for the regulators to look into these practices of inviting the anchor investors in those companies particularly, which are very small in size and they do not require, I think, those kind of anchor investors. I do agree that the likes of LG, likes of Tata Chemical, which are about 10,000 crore, I think there you
Yeah.
probably will need taking anchor investors. So there is a flaw in this entire system. There is a lacuna in the system. In my viewpoint, I think that's a cause of worry. Having said that, I think how would investor take care of this particular aspect? Let's put this point across that investors need to be very, very prudent about buying into the IPO companies. Investors are also, particularly the retail investors, they are also buying IPO companies for flipping and I think not for investing. And that's a cause for worry. Subsequently, when these companies get listed, when the price gets down or when it comes down because of the next issue in which investor wants to subscribe to, as a result of which, I think the genuine investors who have bought this company from investment purpose, I think they suffer. And on a smaller volume, the market is manipulated by those traders, whoever they are. I guess I think the regulators will have to keep an eye open on this particular subject. There are series of measures which are required to be taken out if you want to sustain this kind of IPS in the marketplace. So maybe the buyers beware at this point of time should be the mantra as far as I think the IPS subscription is concerned.
Okay, fair point. We limited our conversation to IT earnings, but I think I must ask you on the entire overall Q2 earnings scenario as well, and if there are any earnings upgrades in terms of sectors or stocks that you believe that we should watch out for, and where could the underperformance continue even in Q2, sir?
I guess I think you're very pertinently asking this question for the second quarter running, and I guess I think we should get an
Yes.
answer from the management commentary this time around when the company's earning season is announced. I do agree that for the second half of the financial year, we are going to be seeing a significant amount of growth in the businesses of many companies, which are mainly catering to the consumption related theme in the economy. Today, the larger part of the money is being spent on the infrastructure. Larger part of the money is also being spent on building the corresponding industry for import substitution called Make in India program. And in my viewpoint, I think these are some of the very fundamental strength of the economy, and that is getting reflected into the workings of the company in general for most of the companies. Where we are confident about, we are confident auto ancillary. We are confident about real estate, particularly the real estate which is given under the ultra luxury in the ultra real estate segment. We are confident about the companies which are basically providing the B2B solutions to their OEMs in engineering R&D space, in some of the case EMS space as well, not consumer electronics, but I think the engineering R&D space. So in my viewpoint, I think selectively there is a case for buying some good quality stock from the portfolio in this kind of a market condition because second half looks pretty interesting from a earning perspective. In this particular quarter, in my viewpoint, I think you might see some subdued performance because of the uncertainty of 3 weeks in the GST related businesses. Though many of the consumer companies have actually worked on that part in last 9 days, that is Navratra days. wherein they reported bumper sale. But in my viewpoint, I think one will have to be little bit watchful about FMEG companies at this point of time. They might possibly see better numbers in the third quarter and the fourth quarter, particularly.
Fair point. We'll keep an eye out on that. Meanwhile, viewers, the markets have settled in the pre-open trade. A tad higher on the Nifty is what we are given to understand. Just about positive bias at 25,074.1% higher, just as what the Gift Nifty was indicating. But the Nifty Bank could be opening with a back foot, at 55,979 odd levels. IT index could be hovering higher, 0.2% up in trade. We'll, of course, look at all the stocks once they open at 9:15 there. Devin sir, I wanted to ask you when it comes to the themes that we were betting big on recently, the consumption oriented themes. Do you still believe there will be a lag and only in Q3 we will be able to get the real impact of GST rationalization and the festive demand? And this quarter may actually turn out to be a subdued one because of the pent up demand and people deferring their purchases. So, how are you looking at that aspect? You did say that auto ancillary are positive. You're positive on. How about FMCG and consumer durables?
FMCG and consumer durables, particularly, I think are going to have a little tough time as I see it.
Mm.
Largely, you mentioned about GST. Yes, I understand. I think some amount of inventory adjustments could possibly take toll on the margin in some of the cases. Third quarter onwards, you rightly observed, I think it could get rationalized also. So yes, I think we all look forward to that particular situation of rationalization. And the pent-up demand which is there in the system is getting reflected in some pockets, definitely for sure. I would think that again it will get rationalized from the third quarter onwards and become new normal hereafter. So overall, I'm not seeing a super growth as far as I think the FMCG, FMEG companies are concerned. They might possibly beat the performance on the GDP side to a certain extent by some margin, at least in 1 or 2 quarters, and thereafter it should get normalized to the GDP level of growth. So if the nominal GDP stands in the region of around 10-11%, some of the companies may end up performing with a growth of around 12 to 15%, including the price increase and the impact on it. So we remain a little bit more clear about it that I think don't expect too high a growth. Maybe I think we have to moderate the expectation of growth. Your 12 to 15% kind of a growth rate in FMCG, FMEG company would be considered a very good growth rate. And in some cases, it will not be achieved. So one will have to distinguish those companies who can make it and otherwise.
Okay, fair point. We'll definitely keep an eye out on that as well. From the banking space, what have your understanding been from the business updates that we've largely got so far? Banking space has largely been an outperforming one, has led to whatever recovery we've seen in the markets thus far. Will that continue in Q2 and in the second half as well? Would you continue to be bullish across the space, or is there like private versus PSUs that you're looking at right now? PSUs looking more appealing because they have underperformed largely thus far.
PSBs are largely basically driven by the government's move to consolidate them. And
Yeah.
that's where you are seeing some amount of buying into PSB counters at this point of
Mm.
time. I'm not a very big fan of buying into PSBs, largely because the fundamentals of the business is not changing, even though you are consolidating. It's more to do with, I think, bringing in the efficiency, which is a must. But for investors, I think it is not changing the fundamentals beyond a point, at least in the near future. Unless they become extremely competitive on every front, I think it is not going to be a real situation. The real situation for the corporate banks and some of the large public sector banks, they are adopting fintech for distributing loans. And that's where probably I think they are generating higher amount of efficiency-led growth. If that is a continuity that one is expecting, then some of the large NBFCs, some of the large corporate banks, and including the largest public sector bank, could be the beneficiary of this particular move which is happening. The crux lies in managing the liability side. I think the liability side today is a situation where they have got some oversupply of, I think, the money in this point of time. So as a result of which they are containing the cost well in this quarter. But the lending part, I think, is not happening as big as I think the corporate banks would like it to be, particularly from MSME and the large corporate sector. So that is an area one will have to watch out for. Overall, positive. I would think that I think the valuation wise these banks are quoting reasonably at a attractive valuation. So selective buying can definitely take place at lower levels in some cases.
I also wanted to ask you on the asset classes vis-a-vis equity. We've seen how gold and silver have had an unstoppable rally. They continue on 44th, 45th records that they're posting in this year so far. I mean, for gold, it's already been an over 50% rally year to date. For silver, even upwards of 62% order. So this seems to be unprecedented, something that we have not seen or anybody expecting it as well. Because just when gold prices and silver prices hit that 1 lakh mark, it seemed already, something that had gone beyond the charts as well. Most of the analysts, were finding it extremely difficult to now pencil in a higher target as well. Whoever commodity experts I spoke to, they said that, this should not be, at this level. And it's beyond our own understanding as to how this has gone. Of course, we do know all the reasons why gold prices have shot up and silver prices have shot up. I mean, gold prices from $3,000 to 4,000 have just happened between March and October. So that's also in a very short span of time, $1,000 in just about 6 months. How would you look at this unprecedented rally? This has led to a lot of FOMO in investors at this point, sir.
Well, I think you have to thank the central bankers of the world to keep buying gold and silver as a collateral assets in their treasury chest. I think the consumer is not happy at all with this price because today in the festive season, the consumer is not finding himself or herself comfortable buying it.
Absolutely.
The jewelry companies are concerned. They may not be able to give the same performance which they have given up till now in the festive season. That's what my hunch is. And that is getting reflected from the visit to showrooms, wherein the footfalls have fallen in this particular season. So, yes, on one side, the speculators, stroke investors are getting benefited because of central bank's action to buy gold and silver. But I think it is the real consumer who is buying at this point of time. Another point I think which may remain significant, it is the structural thing which one may ask for. See, government is believing that 25,000 tons of gold is there with Indian household. Now, suppose if this 25,000 tons of gold can be somehow or other managed to be brought out for the treasury purpose of the banks, then in such situation, I think this rally, which India is one of the largest consumer of gold particularly, this rally can possibly they can put some break into this rally. I don't know, I think how soon, how best it can happen, but there is one possibility. So should that happen, then certainly you are likely to see the break supplied on the commodity like gold. Not too sure about silver either at this point of time.
Okay, all right. Well, thank you then, Mr. Choksi, for being with us on the show and for, of course, helping us with your insights across the board that we've discussed. Always a pleasure to host you with us, sir. Let's go back to the markets. They've started to take on a positive end, viewers. 25,080, about 0.1% high in trade on the Nifty at this point in time, just as how the gift Nifty was indicating. Let's quickly pull up the Nifty IT index. That's the index that we want to watch out for. Remember the lone gainer yesterday and today again a 0.7% of an up move even today, the day when Q2 earnings kickstart with TCS and Tata Elxsi reporting their earnings from the IT pack as well. You can see 25,457 odd levels coming in for the IT pack at this point in time. What's happening on the Nifty Bank? It's slightly on the back foot, 0.1% lower in trade. Mid caps, however, 0.3% higher and 0.2% of an uptick for the small cap index as well. So you are seeing that the broader markets are participating in the positive end. 1115 advances to 612 declines, which means that the market breadth is still on the positive side. More stocks higher than lower. Let's also pull up, some of the other key sectors that we are looking at this point in time. Let's pull up autos, for instance, consumer durables as well to see how they are participating. I do see real estate, pharma, metals higher, autos also pulling up now. Defense stocks also 1/10% higher. Gains are minuscule, but you can actually see across the board some move. Real estate, I think, is pulling up very smartly today, and so is the pharma index as well. Two of them over 1% moves there. Financials and banks, those are the ones that are on the back foot, at least at this point in time as well. Now the Nifty Pharma index is upwards of over 1%, and even the real estate index as well. What's happening? Dr. Reddy's is pulling up in trade. Any other top gainers? Eternal, it has actually got a report there that's pulling up the stock higher in trade. You also have IT stocks like HCL Technologies that's also moving up on the positive end. You also see names like Sun Pharma from the Pharma pack, Infosys and Cipla. So three stocks from the pharma, two stocks from the IT pack that are forming the gainers there. And from the e-commerce space, it's Eternal. But on the lower end, Tata Motors again falls. Yesterday it was the top loser. Today again starting on the back foot. HDFC Bank is lower. Power Grid, NTPC from the power space. Titan is also giving back some of its gains yesterday, so it's lower in trade as well. Remember, yesterday the stock was up by about 4% in trade. But that's how the space is moving in. Look at Prestige Estates. It moved up 5% higher from the real estate basket. Why has it moved up? I'll tell you, and that's because of the business update that that the company has given in. Sales volume up at 47% at 4.4 million square feet. Collections are up 54%. Sales are up 50% at 6,017 crores. On a year-on-year basis, there's a sharp rally across sales, collections, and sales volumes as well. So therefore, you see Prestige Estates definitely up by about 6 odd percent after that business update has actually come in. From the pharma space, Oro Pharma, Lupin, you talk about all of them, they're up and about in trade. In fact, we also have news flows as far as Lupin is concerned. Brokerage houses are penciling in higher targets. Lupin, the pharma major, has plans to establish a new $250 million manufacturing facility in Florida. The upcoming plant will focus on producing medicines such as albuterol inhalers for pediatric asthma patients, and therefore the stock is also reacting to that news as well at this point in time. What's happening on Eternal? That's among the top movers today. Citi has remained with a buy rating on Eternal and has raised the target price to 395. They believe Blinkit growth has had a stellar momentum which continues. Strong growth or user acquisition, accelerated app traffic, ongoing dark store expansion, new city additions, market leadership has solidified as well, boosting the growth and the margins. The quick commerce gross order value forecast is estimated at for FY26 a growth at 123%, for FY26 at for FY27 at 57% year-on-year growth. Therefore, you see Eternal also in clear focus at this point in time. But let's welcome our guest on board. We have now Mitesh Panchal to help us with the technicals in the markets. Mitesh ji, good morning to you. Good to have you with us. First 5 minutes of trade. How is the market setup looking like?
Good morning, Sakshi. Good morning to all our viewers. Setup is so far so good. We are trading at a psychological level of 25,000. So we are of the view that going forward, there will be a consolidation between 24,800 on the downside and 25,500 on the upside. So right now, one should not look at the indices because majorly, what we have done is we have recently formed a bottom, and now we are of the view that the bottom is not going to get tested. So I think now the focus should be on the stock specific and the sector specific. As far as Bank Nifty is concerned, again trading at a psychological level of 56,000. So again, it's a broad range of 1,000 point, 55,500 downside is a pretty strong support. 56,500 on the upside is a bit of a resistance. So in both the principal indices are trading in a broad range going forward. But I think, as I said, the focus should be on the stocks and the sector specific. Now, what exactly is the stocks and the sector specific focus? So we are of the view that now the big boys are coming back on the surface and now going to perform. So we are absolutely bullish on Reliance right now at 1380. With a stop of 1350, one can go long for the potential target of 1420, 1450. So I think a new breakout has happened in Reliance, which is going to help
Okay.
Nifty to climb higher. Second, Sakshi, as we have discussed earlier, here is all about commodities. And that's what we have discussed. You were discussing with Devinji as well about gold. So we are of the view that metal index is trading at a lifetime high. 10,322 was the lifetime high. So exactly at this point of time, metal is trading at that level only. And as we have said earlier also, 2025 year calendar is all about commodity, be it a precious metal or a non-precious metal or agri commodity. So we are of the view that metal stocks likely to outperform significantly, out of which we like SAIL a bit. So at 134 with a stop of 125, SAIL is looking pretty interesting for the potential target of 150, 160. Again, in that same space, Tata Steel at 176 is looking pretty promising with a stop of 160 for the potential target of 195 to 110. And the business group, which we like technically as of now, is the Adani Group. So all the four stocks of Adani Group, that is Adani Energy, Adani Green Energy, Adani Enterprise, Adani Port, is looking pretty interesting. So for us, the basket is pretty clear. On one hand, we are looking at a business group that is Adani. Apart from that, we are also looking at a business group that is Tata in terms of stock picking. Third is all about commodity. So in that, we are looking at the metal right now, followed by sugar and fertilizer. So this is so far so good. This is the placement right now for the next 1 to 3 months.
Okay, fair point. I hope viewers have got a sense of what's really happening, the three clear pockets that Videshji has identified where he's positive on, two conglomerates, Reliance as well as Tata as well as Adani Group stocks, the three of them that he's positive on. And he's also suggested that the metal rally may continue, and SAIL is another stock that within this basket is something that he prefers at this point in time. I remember, Miteshji, we had discussed, what's the importance of gold and silver. You had given us a data point as well. That time around, I think gold was still trading around 1 lakh 3,000 odd rupees odd or so when we had discussed this. And from then on, also we have seen a stupendous rally unfold both in gold as well as silver as well. I wanted to bring that up again for all our viewers who were there with us in our conversation that time, and who followed your advice, and who've been watching you today also. How would you advise at this stage when a lot of fear of missing out has really come in, that I never participated even at 80,000, 90,000, it was unaffordable. 1 lakh levels, it was unaffordable. And now at 1 lakh 25,000 for gold and 1 lakh 50,000 for silver, it still seems quite unaffordable, and one does not know whether this is the right price to invest at this point in time as well. How would you advise that?
Yeah, okay. So, Sakshi, the first and foremost thing is that as far as the investment is concerned, there are a lot of avenues. So, there is one should not regret that I have left out. I mean, there is equity, there is mutual fund, there is. You can straight away go and buy Reliance, you can straight away go and buy Tata Motors, the entire steel pack. Ultimately, when you're investing, you're talking about return, right? Now coming back to specifically gold and silver. So let's talk about the bigger fear than this. Like, I mean, there are people I have come across or who are asking me the question that I have bought at a lower level. What should I do? Because they want to book the profit at that same time they want to greedy and want to exit at the right time. The two things are not possible, actually. So what we recommend to our clients right now is that you should offload at least 60 to 70% of your holdings into gold and silver, provided that if you have bought this asset class for the purpose of return. So here there is a distinction. If you already have a gold and silver, if you want to sell it, that is not our advice. Our advice is pretty specific that if you have treated this asset class as an investment avenue, and if you have bought it at whatever lower levels you have, then go and offload at least 60 to 70% of the stocks which you have. That means the asset which you have. Remaining 30%, it's a pretty simple and a boring principle which you'll have to follow. That is a trailing stop loss. So for example, if I have something, I will definitely sell 60 to 70% of my position right now. And for the 30 to 40%, I will put a trailing stop loss of 1,10,000 as far as the gold is concerned and 1,25,000 as far as the silver is concerned, and keep trailing the stop loss and keep holding that 25 to 40% position. Okay, so this is the strategy one should adopt. Now coming back to the question, original question which you have asked, it's a FOMO, and if I'm feeling that I have left out, I think Sakshi, one should remember that the rally, the downside rally, and the consolidation in gold and silver is on an average 6 to 7 years. So for an example, if gold and silver tops out right now, let's take an example at 1,20,000 gold is topping out and 1,50,000 silver is topping out. Madam, it will take 6 years to come back to that price. So it's a frustration of 6 years. So please keep that in mind. When you have an idea or when you come across the fact that it's a FOMO and I'm fearing I'm left out, please also ensure that it's a waiting period of 6 years to get back to the original price. So it is
Yeah.
not that easy to make money in gold and silver. Majority of the cases, Sakshi, people are actually mixing two things. They are whatever gold they have for the purpose of wearing or for the purpose of marriages, they want to treat that as an asset class and want to sell and want to make money out of it, which should not happen. That is a separate thing. Investment which you're doing in gold and silver for the purpose of making money is a separate thing. So please segregate these two things. Point number one. Point number two, please also believe that it's a 6 years of a waiting period. So if you caught up at a wrong price at the high, if you bought at a wrong price, and if that price unfortunately happens to be the top, then you're gone for the next 6 years. It is not going to yield
Yeah.
even a single penny. And third thing, there are different avenues in which you can definitely park right now with a good risk reward ratio and make money. So I think by and large the question is answered pretty well. I think one should keep these points in mind before thinking that I have left out and let me jump into participating in this rally.
Absolutely. So I hope all the viewers who had this question in their mind, this thing has been clarified to you by our guests as to how to visit it, and of course look at what could be coming in future as well. And should you get trapped at the highest ever point is something that you should be very, very careful about as well. 25,100 is back with us. It's almost the first 15 minutes of trade, and we are also seeing some pickup take place on the Nifty Bank. It's back above the 56,000 mark as well. Some improvement, Mitesh ji, on the index level. How are you looking at it on the Nifty and the Nifty Bank?
Yeah, so I think, as I said, it's all about a consolidation. So, for example, going forward, Nifty is likely to test 25,500. Bank Nifty is likely to test 56,500. Unless and until these two levels are not broken, Sakshi, on the upside with the volume, we cannot talk about a further extension of the rally. So right now, I think if you are talking about taking 500 points in the Nifty and 1,000 points in the Bank Nifty, advisable to chase the entire space which you have talked about. I mean, Tata Steel right now trading at a 52-week high, Hindustan Copper trading at a 52-week high. Again, you see a pretty good buzz in National Aluminium sale and pretty good buzz in the entire Tata pack as well as Adani pack. So I think even if you don't want to buy what we have recommended, not an issue. You go and basically concentrate on the stock specific or the sector specific idea, wherein in the next lag of the rally in which Nifty and Bank Nifty is going to hit an all-time high, you will make more money into stock specific and sector specific as compared to the index.
Absolutely. Let me also ask you on two other sectors. I'll ask you on IT sector and I'll ask you on the pharma sector. Pharma sector is in the buzz today, and IT sector has been also in momentum right ahead of the earnings season as well. Now, interestingly, what our viewers must notice that both healthcare and IT sectors had witnessed highest foreign outflows in the second half of September, as foreign investors dumped shares worth 4,500 crores and 4,000 odd crore rupees in both healthcare and IT respectively. And this is as per the NSDL data that we have. The selling came in amidst the high uncertainty over Donald Trump's proposed H-1B visa restrictions, 100% tariffs on some of the pharma exports as well that were patented and in the branded formulations basket as well. Now we are seeing again a pickup take place in both these sectors. IT sector, again the momentum right ahead of earnings, and healthcare again is also on the bus. How would you look at these two sectors, Miteshi, right now?
Okay, so let me actually add one more sector into this, and that is FMCG as well. So we are talking about for FMCG, we are talking about IT, we are talking about pharma. We are of the view that this is an excellent time to get into these stocks, and actually we have also discussed earlier that the best way to get into this sector is through ETF or through mutual fund route. Because
Yes.
if I have to buy, if I have to invest 10,000 or 20,000 rupees in IT or a pharma or an FMCG, what should I buy? Should I buy Nestle? Should I buy Cadila? Should I buy Sun Pharma? Should I buy Infosys, TCS? I mean, with a lower capital base, you cannot participate the entire rally. So I think the best way to put things into perspective is through ETF or through sector specific mutual fund. You can get into these three sectors. We are of the view that these three sectors are in the consolidation phase, and going forward, they are likely to outperform. The reason I correlate one example, I think in the month of March, the Donald Trump has imposed a duty, July or August, probably on China, right? I don't exactly remember the date. There is a one China specific fund, two specific fund, out of which we have invested in one specific fund that is called Edelweiss Greater Equity China Offshore Fund. And at that point of time, the NAV was around 36 rupees, 38 rupees, which right now is 53 rupees. So in the less than a 1 year, Sakshi, in our clients, we are clocking around on the minimum side 35% return, on the higher side 45% return. What I'm trying to tell you with this point is that when there is too much pessimism in a given sector or a given country, it's a great opportunity to get into, provided that if you have long-term view. So as far as the pharma is concerned, as far as IT is concerned, as far as FMCG is concerned, we are of the view that in next 3 years you could make actually 15 to 18% CAGR if you participate through mutual fund route. So we are buying a mutual fund, sector specific mutual fund in these three sectors, and when we have recommended it as a disclaimer, our clients might have direct or indirect position into that. I don't have any personal position into that, but yes, these are the sectors, Sakshi, which one should look at right now from the 3 to 4 years of a perspective. And you can get easily 15 to 18% CAGR, provided that if you participate with proper discipline with SIP mode, yes, definitely. So we will recommend these three sectors right now.
You will recommend this, festive season right now. So I will definitely ask you on the other aspect, and that's the IPO space as well, Mitesh ji. That has been clearly in the buzz. All across September, we've seen record amount of fundraise, and of course, in October continuing, we've seen two big IPOs, the biggest ones of 2025, open simultaneously. There was a lot of fear that this could siphon off a lot of liquidity from the secondary market, but doesn't seem so. There was a lot of participation. LG got like what 3.3 times subscribed, on day two itself, and Tata Capital sailed through, as well on day two or day three, and now you're seeing the allotment getting happening today as well. How are you looking at the IPO space, and what have you advised your clients on these big IPOs vis-a-vis the small ones? Because many of them, I think what we saw 20 listings in last 2 weeks or so, and out of that, at least 13 of them have also seen slipping below the IPO price. So there's a lot of confusion as to how to assess these IPOs.
Yeah, so you made it very right. There is a too much of a confusion in assessing it, how to go ahead about the IPO. And Sakshi, with all the due respect, we have never been a good, big fan of an IPO. Reason being is that if you look at the history of an IPO, it's more of an illusion because you have a limited history on the charts, absolute limited history as far as the charts are concerned. Apart from that, as far as the fundamental is also concerned, you have a limited history. So we are of the view that it is advisable in case of IPO. Our mantra is very clear at Discipline Advisors that it is advisable to buy once the company has performed, and it is advisable to buy at a higher level rather than at a cheaper level and rush for the IPO bidding. And again, ultimately, what we say is that it's all about an individual application. So, supposing, say, if I'm bidding for an XYZ company in IPO, vis-a-vis, I look at the opportunity cost capital, right? So, what is my opportunity cost if I'm not going to participate? Because you never know that you will get 5%, 10%, 100% return in this IPO. Rather than that, it is advisable to go ahead with the performed people, right? Performed stock. So, we don't recommend IPO in our life to our clients. What we say is that let it get listed, let it get performed, and then we'll participate, right? For example, in case of Eternal, which we all are talking about, what has happened after the listing? Okay, and people have burned the fingers. Nobody wanted to touch it. Now everybody wanted to buy it. So it is advisable once the company start performing, you can buy. But we are not a big fan of an IPO. We advise our clients to stay away from an IPO. Rather than that, in the secondary market, there are brilliant ideas available at a much discounted rate where you can make money with a big or good safety of margin.
Hmm. Okay, got that. Let me also just ask you on some of the other key areas as well. And, I just wanted to understand from you what regards to some of the newer themes that investors have been looking forward to. There's so much of buzz and announcement around that: semiconductors, data centers, chip formations, electronics. And we've seen a lot of these stocks also been among the favorites, and they've been only climbing higher. Dixon, Keynes, Amber, PG Electroplast, they've all been in flavor. Many investors come up to us, viewers come up to ask and find, they want to know from us, what do you think, is the key aspect here? Which are the stocks one should really look forward to? Are these the themes that will be the outperforming ones over the next 5 to 10 years, and therefore should one increasingly allocate more funds to these newer themes or sunrise sectors as they are called? How would you look at them, Miteshji?
So chartically, the sunrise theme is looking pretty interesting on the chart. And since it is giving quick returns, so it is also one of the darling sectors of the participants. But one should understand that over a long period of time, only the old economy stocks will perform, right? So we are of the view that should you treat this? Yeah, absolutely, you should treat this, but as a trading portfolio. Okay, so you buy this for the purpose of say 20, 30, 40, 50% return, and then you sell it off. I mean, it should not be a part of your core portfolio, because Sakshi, what is happening in, I mean, this is not again my forte, but what I listen from my fundamental guys is that when the tide will turn, you never know because of which reason the tide has turned. Because majority of the things in this newer theme is all about forecasting too much of a probability in the current scenario. So we are forecasting 5 years down the line what is going to happen in AI today itself, which we don't know what is going to happen after 6 months or 9 months. So the P ratio at which these stocks are available or the sectors are available is vulnerable. That is what our fundamental guys are suggesting us. So that is the reason why we as a house are not looking at these themes. Probably on the charts, if something is looking interesting with a trailing stop loss, we may get into. But this is not going. This theme should not be a part of your core portfolio. Rather than that, I would definitely go for a defense. Rather than that, I'll definitely go for the stocks like CDSL or stocks like BSC or MCX, where we know that the certainty of the revenue is there, and it is that is what we call as a sunrising sector, rather than these newer themes in which it's all about a platform company. You never know at what kind of leverage these people are taking, and one fine day you come to know that okay, we lost money.
Absolutely. So rather than going for these themes, go for capital market stories, those that are betting big on the India growth story and the increasing participation. One can look at it. Defense is something that you marked out. So let me come to that as well. We have been seeing off late how the government is now increasing or allowing private participation in building up of ammunition as well. That's also a big story that's developing. How are you looking at the defense story at this point in time? And we've seen a large part of consolidation also take place here. So, any top choices of stocks here?
No, see, defense is a very tricky sector,
Hmm.
Sakshi. You never know what is going to come. So the way by which the entire defense stocks has gone up and came down, we have witnessed that. So the best approach in defense is equally allocate amount into certain stocks and just forget it for the next 3 years. If you are going to catch defense story from the technical perspective or from the trading perspective, believe me, out of 10 times, 9 times you will burn your hand. Okay, so advisable to have a long-term view in the defense, select few stocks, allocate equal capital, and just forget it for the next 3 to 5 years. That is what we understand. Now, let us take an example of Musgao Dog. If you look at the entire chart pattern of Musgao Dog, I mean, look at the way by which the stock has started moving from 9,900 level to the tune of 3,000 level in just a matter of few months, and then look at the way by which stock has fallen from 3,800 level, and today it is unable to cross 3,000 level. Now again, Sakshi, in the next rally, the day when it starts moving about 3,800 level, in matter of months, you will see the stock is trading at 7,000 or probably 5 digit. Now we don't know when it is going to happen, but it is going to happen for sure, right? So what we say is that allocate equal capital to few stocks and just forget it for the next 3 to 5 years. Do not treat this sector as a trading bet into your portfolio.
Yeah, very important. Let's also try and understand, newer again talk since we are talking about these newer themes, the e-commerce spaces, Eternal, Swiggy, Nykaa, delivery for that matter, PB FinTech. How are you looking at these new age tech space stocks? And of course, for Eternal and Swiggy, average investors, viewers can link more to these because these have become now an everyday household name, and you tend to use these products on an everyday basis as well because they have entered too soon and changed the way we look at shopping for our everyday needs, essentials in our daily lives. But when we talk about investments, are these stocks good enough to be held for long-term portfolios? Should they be done SIP into? What is the right way to approach? Is valuation a question that we should be looking at again? And are you looking at some more stocks also beyond Swiggy and Eternal at this point?
Yeah, so let me give a comparison to you, Sakshi. On one hand,
Hmm.
let me put Nykaa, Eternal, and Swiggy, and on the other hand, let me put Avenue Supermarket and Trend. Now I will put these two baskets in front of a client and tell them or ask them that where you like to put your money in or where you probably visit. Probably Zomato, I will order once in a month or maybe there are very few people who are using Zomato frequently, right? But on the other hand, look at the balance sheet of DMart, look at the management of DMart, look at the management of Trend. So again, as far as the new age theme is concerned, Sakshi, I will put 3 to 5% of my capital and will play this entire theme with a strict stop loss as a trading bet. But I will not consider that as my a core portfolio, not at all, because I have much stable companies technically looking, fundamentally looking like Trend. The way by which we have seen a correction in Trend, I think it's available at a absolute lucrative position. The way by which the consolidation phase is going on in the DMart, I think it's absolutely a great stock to buy as of now, right? So as far as this newest theme is concerned, I have the similar theme like this, I mean, DMart is also a platform company like Zomato, right? There is no difference. DMart is not producing anything. Zomato is also not producing anything. So if at all I have to bet on the platform companies, I will be going for Trend or DMart as compared to Swiggy or Zomato or Nykaa.
Okay, fair point. I hope this has also truly helped you out. Let's also get an understanding from you towards the end of the first half an hour of trade for the rest of the current calendar year till December. The festive season and the spirit will be still up and about. What is the strategy you would advise to investors for those who may be wanting to play the festive season? What's your strategy on the index and any key stock ideas that you can give for the festive season?
Yeah, so as far as the indices are concerned, actually we have discussed it, and I think we might make it to this that during the Deepavali time or after that, we see indices trading at a lifetime high. That is our stance, which we have advocated earlier also. So towards this year, and probably we may see going for the next 2026, we may see prior to 1st of January 2026, we may see indices trading at a lifetime high. So the strategy is pretty clear. Any dip going forward should be bought into as far as Nifty and Bank Nifty is concerned. Now, as far as the investments ideas are concerned, so there I split that into two parts. First is a trading bet, second is an investment bet. So as far as the pharma, the IT, and the FMCG is concerned, I will definitely buy for 2026 through SIP mode, through mutual fund mode, or through ETF mode. I would like to park my money into these three sectors. As far as the high beta is concerned or the trading bat is concerned, I would like to go ahead with the metal, the sugar, and the fertilizer on one hand, and Tata and Adani as a business house on the other hand. As far as stocks are concerned, I would like to go ahead with Tata Steel, Hindalco, and SAIL as far as the steel is concerned, Balrampur Chini, EID Perry as far as the sugar is concerned, and Chambal Fertilizer and Coromandel Fertilizer as far as the fertilizer pack is concerned. On this side, as far as the Tata pack is concerned, I would like to go ahead with Tata Elxsi, Tata Tele, Tata Motor, and as far as the Adani Group is concerned, all the four stocks: Adani Energy Solution, Adani Green Energy, Adani Enterprise, Adani Port. So this is a trading portfolio. FMCG, IT, and pharma is an investment portfolio for the year 2026.
Okay, fair point. I hope this has given a comprehensive view to all our viewers as to how to identify the pockets for investment opportunities at this stage in time as well. Videshi, we'll thank you then for being with us on this special and for helping us all out on various subjects that we have discussed today. And I hope this has really gone into the understanding investment books for all our viewers as well. I hope you've noted all of those gems in mind and the tips and the tricks that have been shared by Miteshi for all of you today. Thank you so much. Appreciate your time, Miteshi. We'll see you soon, another week. All right, viewers, let's wrap up the morning trading action. 25,063 flat with a positive bias right now, but let's see whether we pick up any pace throughout the course of the session. Remember, the Sensex contracts expiry and the volatility is something that may play a factor today. And of course, we will also be looking at what brokerage houses are penciling in right ahead of the IT sector earnings, and we'll give you all of that update as well throughout the course of the day. In case you have any questions about the stocks in your portfolio, ask them at 12 noon on daily calls. I'll be back for that edition too. Many thanks for being with us, but do stay tuned on Business Today Television.